Welcome back to the Legacy Radio Network. You're listening to the Everything Financial Radio Show. I am your host, Dennis Tubbergen, and we have the privilege today of chatting with Professor Laurence Kotlikoff. And Professor Kotlikoff, we were talking a bit of politics prior to the break, and you had mentioned that were you president, you would call the top 100 employers in the country to the White House and ask them...
1,000.
Top 1,000, I'm sorry. And you would state, hey, guys, I'd like you to increase your employment by 5%. Now, just to play devil's advocate here for a moment, if you take a look at the consequences of debt, we've been discussing this on our program for quite a while, and we look not just at public sector debt, but private sector debt as well. In your opinion, can the economic drag of the deleveraging process as this debt is dealt with be overcome to get the economy moving again using this program or others? What are your thoughts?
Yeah, a lot of our fiscal problems arise from healthcare spending that's out of control, and it's projected to continue out of control. So if you do long-term planning and you say, gee, let's put into place some policies that actually are going to work through time, then you're not taking all the adjustment right at the moment. You're not focused on a big problem, doing all the fixes this week, this month, this year. So, again, I think you have to have leadership that knows what it's doing, understands why the economy is in trouble, understands coordination failures. I haven't heard that term being used by the Obama administration, in the last 3 years. It just hasn't come up. They haven't explained why the economy's not working. I think it behooves the guys running their economic policy to come forward and say, here's the specific problems the economy is facing, and here's why this is going to actually fix those problems. So I think we can do this. It's, as I said, we're in a terrible long-term fiscal shape, so it's a very big job. We need to have radical heart surgery. We can't keep putting Band-Aids on the patient.
Professor, I want to zero in on entitlements like Social Security and Medicare, to name the largest two. When you look at what we spend on entitlements, when you look at interest on the debt, entitlements and interest on the debt consume almost all tax receipts. You had mentioned that listeners could go to the purpleplans.org and see and review some of your policy recommendations.
And also endorse them online. You can endorse them, and they can send them to other people, so we can get millions of people endorsing these plans. We can make a difference.
And I would certainly
politicians will sit up and take notice.
I would certainly encourage all listeners to do that. Again, that's purpleplans.org. Given the demographic realities,
the Purple Plan. Sorry,
thepurpleplans.org. We'll get that right. We'll give it again too before we finish this segment. Given the demographic realities we face, we've got so many retirees as compared to workers actually paying taxes. Can you share with the listeners what they might find at thepurpleplans.org as far as what is the solution for bringing entitlement revenues and expenditures back into balance?
Well, I'll give you an example. We have a healthcare system that is now spending about 10% of GDP at the government level on healthcare. The Congressional Budget Office projects that 10% figure to go up to 23% of GDP over time. That is right there, that's responsible for 60% of our fiscal gap. So a simple thing to do is to set a budget of 10% of GDP where it is now and keep it there for giving everybody a basic health care plan. And the Purple Healthcare proposal, Purple Healthcare Plan, takes 10% of GDP and it spends it on a voucher for each person in the country. Each U.S. citizen gets a voucher. The size of the voucher is dependent on your physical condition. If you're in worse shape, you get a bigger voucher. If you have diabetes, for example, you get a much bigger voucher. Anyway, it's based on your expected health care costs. You take your voucher to an insurance company, and they have to sell you the basic health care plan that would be whose provisions, whose coverages would be determined by a panel of doctors. So the panel of doctors set the coverages so that the cost of all the vouchers equal 10% of GDP, and they do this every year into the future. So every year, everybody has a basic plan, and every year the total cost of the country is 10% of GDP. It's not heading up to 23% of GDP. That's a very simple solution. It's the fundamental. It's got fundamental elements that accord with President Obama's health exchanges and Paul Ryan's proposals, but it has a ceiling on the expenditure that we can actually afford, which is 10% of GDP. Now, that's a very big share of GDP. Switzerland spends 11% of GDP on all its health care. We're spending 18% in total in our country. If we spend 10% on basic health care for everybody in the country, we can get an excellent plan for everybody if we do it correctly. So that's just one example of thinking out of the box, of understanding what's needed. We have a health insurance industry that's not working for a very good reason, which is adverse selection. They try and cherry pick. This avoids that because if you're in worse shape, you get a bigger voucher. The insurance company has no incentive to turn you down because you're coming at them with a bigger voucher if you're in worse shape. And they also wouldn't be allowed to turn you down. So we can fix this health care problem, this health spending problem, in a minute, really, with the Purple Health Plan.
And that's at thepurpleplans.org. And I would encourage all the listeners to go visit the site and certainly read it and give it your support. Professor Kotlikoff, it seems that mainstream Washington politicians, at least collectively, seem to be ignoring these fiscal realities. If this doesn't change, if this isn't addressed, at what point do interest rates on U.S. debt spike like they have in so many European countries? When does the bond market say enough is enough?
Well, the bond traders aren't looking at the right numbers. Wall Street continually seems to misprice securities, and that's why we have these different crashes and bubbles. So I've been predicting a crash in the U.S. Treasury markets for a long time. I think they're among the riskiest securities in the world. Same thing with British gilts. The U.S. and the U.K. are in the worst fiscal shape of any of the developed countries, yet their bonds are selling at the highest prices. At some point, fiscal reality is going to take over. The deficits are huge in these countries, and they're just going to get bigger through time. So at some point, people will start heading to investing their money in New Zealand, which has a sensible fiscal policy, or Canada, or gold. Invest more in gold. It's a very dangerous situation when you have irresponsible fiscal behavior under the guise of responsible government. We have a president who believes that you can spend your way to prosperity, and we have a Republican opponent who says you can cut taxes to prosperity. This is madness. This is folly. This is voodoo economics on both sides: demand side voodoo economics and supply side voodoo economics. It's a tragedy in the making. So I think people have to take a lot of actions to protect themselves personally, and the Clash of Generations has discussion of how to do that. It not only lays out the broader problems our country faces and some policy answers in very short terms, but it also lays out personal solutions for people.
Professor, we have about 2.5 minutes left. In the Clash of Generations, which I'm assuming Amazon and all the major bookstores is where someone could
yeah, they do have it. Yeah.
Could pick that up. You talk about protecting yourself and personal solutions. Take someone that's retired; they're sitting on a nest egg. In a couple minutes, just on a cursory basis, what kind of advice would you have for them?
Well, I would say you want to protect your downside. So you want to take a chunk of your assets and invest them in inflation-indexed bonds, U.S. inflation index bonds, which are going to be the easiest way for the U.S. government to renege on its debt is by printing money, and inflation index bonds are protected against that. So I would think long-term inflation index bonds, even though the yield is very low, that's one way to go. Another way to go is to invest in countries that are more responsible in the bonds of Canada and Australia and New Zealand. These are three well-run countries. Chile is another well-run developing country. And in buying inflation-indexed annuities, there are some major insurance companies that now issue those. So you want to build a significant floor, or a decent floor to your living standard. And then, if you want to take a gamble, stocks are relatively cheap because of the concerns. Real estate is relatively cheap. When you buy a house and you sit in a house, nobody can raise the rent on you. And if the prices of the house falls, well, the cost of sitting in your house also falls, the opportunity cost. So you're not worse. If you're 70 and you're going to stay in a house for the next 30 years, that's a safe thing to be in. So I would say that if the elderly are renting, they should buy. The movement towards renting is not a good move in our country. So these are a couple quick ideas. The other thing is not to invest with brokers or financial planners that are charging you 100 basis points or 150 basis points to lose your money, because 75% of these people underperform the market. So there's some very sensible things. On the side, I have a company called Economic Security Planning. We have software at esplanner.com. It's esplanner.com, which helps people figure out how to build a floor to their living standard, and it shows them the upside if they invest in safe ways to build this floor, and then think about their stocks as gambling money, and then they can see with our software the upside to their future living standard if they both invest and spend in this manner.
Professor, thank you for joining us. Always a pleasure to have you on the show. And very quickly, to the listeners, thepurpleplans.org. And, Professor, if they want to know a bit more about the planning software, I believe the website you gave was esplanner.com.
esplanner.com, and the book is The Plastic Generation.
Professor, thank you. Everything Financial Radio will return after these words. Stay with us.